Hey everybody, Maxwell Ventura, realtor with Douglas Elliman here at the Discher Group at the downtown headquarters. You know we like to touch on downtown, so I'm going to include that in this February market update along with a little bit of forecasting starting right now. So 2022 is picking up right where 2021 left off. On a national level, we are at the lowest inventory we've had since 1999, a little over 900,000 homes nationwide. And affordability is continuing to drop. We have the reason being increasing sales prices, inflation has been running rampant, and the mortgage rates have increased as well. So all of those factors are going to combine into lower affordability, lowering buyers' purchase power. And because of that, we are expecting a little bit of a slowdown headed into the remainder of the year. So now as we jump into the numbers, you'll see that the active homes in the market have actually increased from last month, which is a big plus. We were in the 1,300s, now you'll see we're a little over 1,600, although we're still about half the inventory that we had total this time last year. Month supply of inventory, similar story. Last month we were at 0.4, now we're up to 0.5, so still only a half of a month of supply of inventory, which is very low, heavy seller's market, but at least trending a little bit in the opposite direction. We'll take what we can get right now. And then so if we could look at pendings, closed, total actives, they're obviously going to be in the negative, being that we have such less inventory, and those are all kind of going to be lagging metrics of each other. And median sales price, the highest it's ever been for the entire county, all encompassing detached and attached condos and townhomes. You'll see it's a 20% year over year increase, and we're at 780,000 is the median. Percentage of original price received, this is the agreed upon offer accepted price relative to the list price. You'll see that has actually gone up from last month, was in the 102s, now it's 103.3. So again, that's an average. So when we're looking at a median sales price home, those are going to be the homes that average is actually considerably higher than that. You know, it's the homes that have been on the market for quite some time, and now they were overpriced, and so now people are coming in with a lower offer price to bring that average down. But right around that median sales price of, let's say, 750,000, that's going to be a considerably higher percentage on average than the 103.3. So, you know, I would expect you could be coming in anywhere from 5 to even 10% over list price, depending on where the home is listed. Some agents, it's becoming more popular, and I'm guilty of this too, will come in just a little bit under what we perceive the market value to be, and it attracts more buyers. And it also depends on what the seller is looking for. If that's what they want and they want to create a bidding war, then we're going to help them do that. It's not always the case, but it's very common to see homes listed nowadays just a little bit under the perceived market value. So moving right along, here at the Discher Group, we like to cover and take pride in the downtown market. We're located downtown, and there's some alarming statistics that I want to run through with you. So look at the median sales price. This time last year, 500,000. This is for all of 92101, and now look, 31% increase, and we're at 655. So if you bought a median sales priced unit this time last year, you just made approximately 150,000 in appreciation alone. And then just take a look at the active homes for sale as to how much that's dropped, negative 72%. And the month supply of inventory is down 80%. And so we've been saying this for a while here at the downtown headquarters, is that because of the multitude of development projects and the tens of thousands of high-paying tech jobs creation that are coming in, AI, biotech, life sciences, this has been something that we've forecasted for a little while. I mean, it's really no surprise, but the proof is now in the pudding. As you can see, it's such a drastic difference for 92101. So moving right along to some forecasting, this data is coming to you courtesy of Alan Nevin, who's the chief economist at Expera. You'll see that despite the 12 plagues listed below, this is expected to be another banner year for San Diego. And just touching on that, you know, we had the lowest rates in history. And even with the supply shortages and increases in lumber and construction costs, we're expecting to have another banner year in new construction. We had more new construction last year in 2021 than we did in 2020. Although even with that being said, it really didn't help us in the inventory category. We actually lost half of our inventory, but expecting another year of new construction, and we certainly need it. So in closing, if we look back at history, that would tell us that 2021 was quite an aberration. And of course, 19 to 20% year over year appreciation is certainly not something that you would think is sustainable. But so projections are coming in at around 8% for 2022. But hey, 8%, let's say on $1 million property, I'll take 80 grand in appreciation all day, right? And that's just one of your returns of real estate, not counting principal pay down, tax savings, and potentially cash flow if it's an investment asset. More of the same. If any of you guys, I'm telling you, it's a great time to sell right now. We're at the top of the market before rates continue to go up as they're forecasted. It's still moths to a flame. If you are looking to sell, myself or someone on my team would be happy to help you. I hope this was of some value, and I'll see you on the next video.